All right. A little bit different today. I'm just going to talk about what I've been doing to trade some of the movements in the commodities um, of late. So oil. I rarely trade oil futures. The futures contracts themselves are pretty chunky. I think the standard ones are $1,000 a barrel. So you're looking at 100,000 Aussie dollars plus, depending on where the price is. So they're pretty chunky, and it's just volatile. And I just found trading the oil futures was a bit of a pain in the ass. So, and also last year when I was looking at it, it was like 70, 75, and I kind of thought, well, I've probably missed when I had like missed the bulk of the move. So what do I do? Anyway, so I ended up doing some put options over this little baby. This is Woodside Petroleum Australia. So that's an oil and gas producer in Australia. And this is what I'd done. And I did it for a few reasons, right? And I'd done one of my favourite patterns of, big run up, right? Then a series of lower highs and then dropped in to fill the gap, right? It had done that. That was the COVID thing, like in there. Right? Then I could see it was doing the reverse here, right? On a smaller scale, where it dropped like a stone. Then it had filled in, biding the time with this time some higher lows, right? I thought, it's going to fill that gap, right? It's going back to $30, like no questions asked, right? Which of course it has done for reasons that you can't predict, right? But it's like the technicals often they just kind of set it up so that when an event happens, it just goes to these natural places. The events being the trigger, right? And so what I did back in September last year, right? So when oil was around about $23, I sold some $23 puts expiring in December. And I thought, this is a good way to play the oil market because of a few things I'll show you later. And I've sold about 10,000 of these. So that's about I've got $1.50 in the premium for them because Woodside volatile stock. So the vol on it was great for selling options, terrible for buying them. Anyway, it's been paying off pretty nicely lately. Now, I guess the terrible thing is really we're talking about trading, a market to try and take advantage of what's going on in terms of Ukraine and Russia, and that's a pretty fucking sad thing to do, really. Unfortunately, it's part of the game. I think probably the worst example of this was when I was trading and the Twin Towers, the World Trade Center, was attacked and the planes flew in, and I was trading then, and I got the call when the futures market started going crazy and got up. It was 10:30 Australian time, and trading these markets while you're watching what's going on TV, it's pretty fucking sad to know what you were doing. It's not good, but unfortunately it's part of the game to protect your position. It's part of your job, right? But it is pretty fucking sad to know that really you're looking at these things and saying, how do I make cash out of it? It's not very comfortable. It's very fucked up, basically. Anyway, so this was Woodside, right? So it's kind of come good lately. The other reason why I thought it was a good way to play the oil market was because of this, right? So this is WTI, and you can see there's a great correlation, right, between the oil price and Woodside. I mean, it's right there. But of course, you look what's happened here. Just look in the way the oil price spiked up and how Woodside back here is massively lagging, and it's still massively lagging. So that was a way to play the oil market where the futures was tricky to trade because of the volatility, and I missed the bulk of the move. Basically, I was focusing on other things, and I thought, well, I still think the oil price is got a little way to go. Still think it's firm, but not really confident to go long via that means. So I went long via selling a Woodside Petroleum put. Anyway, that's what I've done, and it's kind of coming good. That's been 100 grand or something like that. So the other way that I'm looking to play the market now is, of course, when you look at Russia and Australia, there's a few things in common in terms of their exports. Big wheat exporters. Look at wheat, kaboom. Obviously oil and gas, right? I guess for Australia's case, it's more gas than oil. Let me see if I can add in gas on this one. And have a look at how it goes, right? Right. Now we can see that, so this is gas, and it hasn't quite spiked up yet as much as oil. Look at that. I mean, it depends where you do it, right? But oil has very much spiked up. Look at these highs here, whereas gas hasn't. Oil and gas, they really do trade very much in well, you can see it, right? They trade in tandem. Gas has still got a bit of a way to go. Australia's a much bigger gas exporter than oil, that's my understanding. Coal is another one. You look at gold is another one, you know, the precious metals. So Russia and Australia, they're both economies around about the same size in terms of GDP, and some of the big exports, oil and gas, coal, and wheat, for example, they're big players, right? So the good news is for Australia, with Russia being shut out, that's been good news for these commodities. And it's sort of like, well, that's great, but what do you do when you've missed that move, like in either oil or wheat or whatever? What do you do? Well, you kind of go here. So this is the currency, right? The Aussie, right? This is the Aussie versus the Goldman Sachs Commodity Index, right? And so I've gone long the Aussie again, and so you can see here, that's what the index has done, while the Aussie has gone the other way. That is an anomaly. I've been keeping on that for a little while, because it does go back to like the big, towards the end of last year when, really, actually longer, right? When the Aussie was kind of coming down, but the commodities index was going up. And now I think that it's, fair value for the Aussie now is going to be like over 80 cents, I think. So that's another way to play that commodities market. I guess similar to Woodside and oil. It's like when you miss the boat, but you know what's going on. What's the next card in the hand that you've got? And it's like, okay, well, if you're led with oil, wheat, and coal, that's great. You don't have any of that. Where do you go next? You go to the Aussie. And when I ran, when I was at the bank, right, the FX orders would come through, and you often get customers doing the rand, the real, Brazilian real, the CAD, the Canadian dollar, and the Aussie in one go as a commodities basket, because they're all similar ones. I guess I never saw them doing the ruble, right? But certainly the real, the CAD, the rand, and the Aussie were really a commodity basket, and we've seen just this little kind of lift in the Aussie, but it's it's got a way to go to kind of catch up with the real there. And when you look at, let me just go back to that one. When we go back, the Aussie, you can see it is this kind of trend here, this big trend line down. It has just been broken, and we've got a good support there down at like 70 cents. With commodity prices going where they are, there is no way The Aussie's going down to 70 cents. There's a few supporting things, such as it was being depressed in terms of the rate moves, but the commodity story is totally trumping that, and I'd say is off to the races, right? Particularly once it breaks through this level, it could really be a little bit wild. I've got another chart where I look at the Aussie in a little bit more detail. Where is it? Here. Right. Now, let's go out to like something about a bit of a weekly, right? Right, here we go. This is some of the technicals I'm looking at behind the scenes, right? So there's this move from this breakdown point. This is when it was up at par. I shorted up here. That was one of my great trades. That funded a really nice overseas holiday. There, back to there, down there. That was a great 1.6 move. The Aussie does trade in quite a nice technical way, right? Similar to here, this move, like from that breakdown to there, up to this point down there. Look at that on the knocker, 1 to 1. Here, from this point up to there, down there, we're looking like 85, even like 95. Look at that one. That's calling, isn't it, right? And that's within reach, right? Because the sanctions against Russia, they could stay in place for years, right? It's not like the EU and America are going to like forget about this within 6 months, right? So taking out basically an economy the size of Australia with a similar exporting profile of commodities, oil, gas, non-ferrous metals, as in gold, platinum, all that kind of thing, and wheat, like agricultural commodities, that basically, that kind of doubles the demand for Australia, right? Which is great. So the currency is definitely going to be a winner on that over the long term, I think, right? So just as we've saw some very nice technical moves down here, right? When we go on the way back up, I expect us to see like 85. There's a beautiful gap, really beautiful gap in there. Look at that. That would be glorious. Really nice level up here. Up there, that's like all-time highs, right? So there's some very nice targets there. And if you're an Elliott wave thing, this is like 1, 2, and it's off to 3, right? 3 is the longest and the strongest. 95 cents could be a good one to come. The other interesting thing is just on a smaller time frame. If we look at some of these levels, is it going to do it for me? I'm not sure if it's going to do it for me. Come on, baby. You can see just in here, just this range that has been from 70 to 72. A 1 for 1 takes up to 75. It's bugging up. Anyway, I'll leave it there. But you can see how it's got some very nice little technical levels in here. Look, my technology's let me down, but that's pretty much it. So that's what I'm doing in terms of the Aussie and trying to take advantage of what's going on in the commodities. All right, that's about it. Have a good one. Ciao.